Hello, friends. What if you could invest in the company that builds Pakistan's smartphones, TVs, and air conditioners right at its IPO? Let me walk you through the Select Technologies IPO and how you can take part through IEL. This is the initial public offering of Select Technologies Limited on the Pakistan Stock Exchange, a wholly owned subsidiary of Airlink Communication. Shares are offered from a floor price of 28 rupees up to a ceiling of 42%, with a minimum bid of 2 million rupees. Registration runs from the 17th to the 23rd of June, closing at 3 p.m., and book building takes place on the 22nd and 23rd. As an IL client, you can place your bid through us. So, what is Select? In simple terms, it's Pakistan's first listed smart device maker. It assembles the full range of Xiaomi smartphones and smart TVs here in Pakistan. It's now adding Hisense air conditioners and TVs, and it's a company of Airlink, the country's #1 mobile distributor. That parentage and those brand partnerships are the foundation of the whole story. Here's the offer in four numbers. Shares start at a floor of 28 rupees with a band that can rise 50% to a cap of 42. 10% of the company is being sold to the public, raising about 2.5 billion rupees. Keep that floor of 28 in mind. We'll come back to it when we talk about value. Why take part? Three reasons. First, Select became a market leader fast, about 15.5% of Pakistan's smartphone assembly in under 4 years. Second, it's tax-free to 2035, which lifts its margins. And third, it's priced below fair value, a meaningful discount to what the business is worth. Let's unpack each of these. Select is backed by giants. Its parent, Airlink, is Pakistan's #1 mobile distributor with around 22% market share. Through Airlink IT partners with Xiaomi, the world's third largest smartphone brand, and with Hisense, a global top 2 in televisions. These are world-class names trusting Select to build their products in Pakistan. Select makes three things. Smartphones, the full Xiaomi Redmi range, are the engine today. It also builds smart TVs for both Xiaomi and Hisense. And it's now entering air conditioners with Hisense, a brand new line funded by this very IPO. Three products, two of the world's biggest brands. At its heart, this IPO is about growth. Today, Select can make 3.5 million smartphones a year after the expansion that doubles to 7 million. On top of that, it's adding a new 400,000 unit air conditioner line and doubling TV capacity, with the new plant coming online from financial year 2027. Here's a real edge. Select's new facility sits inside a special economic zone, which means a 10% year income tax holiday running to 2035. In plain terms, as production shifts there, the company keeps more of every rupee it earns, lower tax, higher margins, and better returns for shareholders. Now the bigger picture. Pakistan has shifted from importing phones to making them. Local assembly has grown from under 12 million units in 2019 to about 30 million in 2025, roughly 18% a year. And with 5G now launching, a nationwide upgrade cycle is beginning. Demand for locally made phones is structural, and Select is a leader in it. The financials back the story. Revenue runs near 49 billion rupees a year, having scaled around 150% a year since 2022. Importantly, profitability is improving. Gross margin rose to 16% in the first 9 months of FY26, up from 9% in FY25. And net worth has more than doubled to about 12 billion rupees. So where does the money raised go? The largest share, 43%, funds working capital as the new line scale. A quarter builds the new Hisense air conditioner line, 17% upgrades smartphone machinery, and 15% goes to TVs. In short, almost every rupee goes into capacity and growth. And here's what matters most for you as an investor. Value. The consultant's valuation puts fair value at about 47 rupees a share, against a floor of 28, roughly 67% of upside. At the floor, it's offered at about 12 times earnings versus the sector's 18, a one-third discount. You're being offered a fast-growing, tax-advantaged business below what it's worth.
As always, these are estimates, not guarantees. Of course, no IPO is risk-free, so let's be clear about the main ones. Select relies heavily on Xiaomi as its customer, though that's easing as the Hisense lines grow. It carries a leveraged balance sheet, but the IPO equity reduces debt, and it imports its components, which brings currency risk, though most of that passes through to Xiaomi. Please read the full prospectus before deciding. So, how do you take part? Book building, where investors place their bids, is on the 22nd and 23rd of June, with registration in the days before and public subscription in early July. The simplest way to participate is to place your bid through Integrated Equities Limited. Get in touch and we'll guide you through every step. To sum up, Select Technologies is a market leading partner backed manufacturer, doubling capacity tax free to 2035 and offered at a real discount to fair value. If you'd like to take part, book building is on the 22nd and 23rd of June, and you can bid through IEL. Reach us at il.net.pk. Thank you for watching, and do read the full prospectus before you invest.